Yo, what's up guys? Welcome back to the channel, and today I'm going to show you how to understand Upstart's loan terms and conditions. It's going to be a quick one. We're not going to waste much time. So before accepting your loan, it's important to understand Upstart's loan terms to avoid surprises, and here are what to focus on. So the first thing to focus on is loan amounts and repayment terms. So Upstart offers personal loans ranging from $1,000 to $50,000. Now, loan terms are usually between 3 to 5 years. That's 36 to 60 months. And longer loan terms means lower monthly payments, but higher total interest paid. The second thing to note is interest rates and fees. So annual percentage rate, that's the APR. This typically ranges from 6.7% to 35.99%, depending on, of course, the credit worthiness. There's also origination fee. So Upstart deducts 0 to 12% of the loan amounts before disbursement, and that's the origination fee. There's also late payment fees up to 15 or 5% of the unpaid balance if a payment is missed. So you're gonna have to pay late fees for that much. So it's good to take note of that. There's also prepayment penalty. So there's no prepayment penalty, and you can repay early without any extra fees. Another thing to take note of is the monthly payments and due dates. So your monthly payment depends on the loan amounts, the loan terms, as well as the APR. Now, payment starts 20 to 40 days after the loan approval and are due on the same date for each month. Another thing to take note of is the automatic payments and autopay benefits. So setting up autopay can reduce your APR by up to 0.5%, while manual payments are possible, but missing a due date is going to impact your credit score. Another thing to take note of is loan usage restriction. So you can use an Upstart loan for debt consolidation, for home improvements, for medical expenses, or major purchases, but you cannot use it for college tuitions, for illegal activities, or for investments like cryptocurrencies. One other thing to note is cancellation and loan return policy. So if you change your mind, you have 3 business days to cancel the loan before the funds are processed. Now, a couple of tips before accepting a loan. The first is to calculate the total cost. So you want to multiply your monthly payment by the loan terms to see how much that you're going to pay in total, just so to know if the loan is worth it. You can also read the fine print. So pay attention to origination fees, interest rates, and repayment conditions. And also you need to ensure that you can afford payments, because late or missed payment is going to severely hurt your credit score. That's pretty much it for the video, guys. Hope you guys liked it. Hope you found the information useful enough. If you did, like the video, comment down below, share the video with your friends, and subscribe to the channel if you haven't done so already. And I'll see you guys in the next one.